Welcome back to Talk Tickers, your go-to for breaking down those earnings calls and finding the nuggets of gold hidden within.
Yeah.
We are diving deep into EPAM Systems Q4 2024 performance.
Absolutely.
This one just dropped on February 20th, so get ready.
Get ready for some insights. Yeah, what's fascinating here is that EPAM exceeded expectations.
Really?
They're reporting mid-single-digit revenue growth exceeding projections for the quarter.
Wow.
This also marks a return to year-over-year organic revenue growth.
That's impressive.
First time since Q1 2023.
Especially given all the, choppy waters in the economy recently. It seems like they're doing something right. What do you think is driving this success?
Well, their core engineering services remain strong.
Okay.
That's their bread and butter.
Right.
But there's also this surge in demand for their AI expertise, particularly in generative AI.
Generative AI, that's the one that everyone's talking about.
Right.
Can you remind me? It's the one that can write code and create images and stuff. But what does that actually mean for EPAM's clients?
Think of it this way.
Okay.
Generative AI is like having a superpowered intern who can churn out creative content, write basic code, even analyze data.
I like it.
EPAM is helping their clients to harness this technology not for novelty, but to streamline processes, boost efficiency.
Got it.
And even create entirely new products and services.
So they're really translating it into tangible solutions.
Exactly.
Not just riding the hype wave.
And they're not just talking the talk, they're walking the walk.
Okay, good.
Highlighting real-world examples like Canadian Tire Corporation
Wow.
and Baker Hughes, showcasing how their AI solutions are driving measurable results.
Those are big names. Not some experimental startups. It seems like you're attracting clients who are really serious about integrating AI into their operations.
Yeah.
What makes them stand out in this increasingly crowded space? I mean, are they really ahead of the curve, or are they just, riding that hype wave?
Well, that's the million-dollar question.
Here is.
But they're definitely positioning themselves as leaders in AI execution, not just AI theory.
I see.
And one thing that sets them apart is their three-pronged approach.
Okay, what's that?
First, they're using AI to supercharge their own software development process, making their teams more efficient.
Makes sense.
Second, they're helping clients build the necessary data and cloud infrastructure to support these AI initiatives.
Right.
And finally, and perhaps most importantly, they're creating what they call AI native programs, these solutions that are specifically designed to leverage AI's power.
Interesting.
That deliver clear, measurable return on investment.
Okay, so they're not just implementing AI for the sake of it. They're really focused on demonstrating that real-world value that it brings to the business.
Exactly.
That's a crucial distinction.
Yeah, a lot of companies are still struggling to move beyond the theoretical potential of AI.
I can see that.
But it sounds like EPAM has figured out how to make it practical
and profitable.
But, they're also acknowledging that 2025 will be a year of balancing client cost sensitivity with the need for those transformative investments.
Oh, yes. The classic dilemma. So how are they navigating this tightrope walk? What are their key priorities for the year ahead?
Well, they're prioritizing three key areas.
All right, lay them on me.
Talent retention.
Okay.
Developing their generative AI platform.
Uh-huh.
And integrating those recent acquisitions.
Oh, the acquisitions. We kind of skimmed over those earlier.
Right.
NeoRIs and First Derivative, are those proving to be valuable additions, or are they just window dressing?
Well, from the numbers, it looks like they're integrating well.
Okay.
These acquisitions brought in nearly 6,000 new employees.
Wow.
Boosting their global reach, diversifying their talent pool, which is especially crucial given, the current talent shortages in tech.
Everyone's talking about the fight for talent.
Yeah.
Especially in the tech world. So it seems like EPAM is being strategic about tapping into different talent hubs.
Absolutely. They even mentioned that India is now their largest single-country delivery location.
Wow.
Showcasing their commitment to a global workforce.
That's a significant milestone. So we've got strong core services, booming AI demand, and strategic acquisitions. But no company is perfect, right? Where are the challenges? Are there any cracks in this seemingly flawless facade?
They're facing margin pressure, partly due to those compensation increases they're implementing.
Right.
to retain top talent
Tough market.
in this fiercely competitive market.
Very competitive.
It's a classic double-edged sword. Investing in your people is essential for long-term growth,
Sure.
but it can impact short-term profitability.
It's that age-old struggle, balancing the short-term gains with the long-term vision. But it sounds like they're willing to make those tough choices to secure their future.
They are. And speaking of securing their future, this brings us back to their big bet on generative AI.
Okay.
If this gamble pays off, could it potentially catapult their growth and profitability beyond current projections?
Now you're talking. That's the kind of thought experiment that gets investors' hearts racing.
Yeah.
But let's not get ahead of ourselves.
Right.
Before we delve into the This Is Not Financial Advice segment
Yes.
and unleash our wildest speculation, let's take a closer look at their financial performance.
Let us do it.
Just to understand the foundation of this AI-powered growth story.
Sounds like a plan.
Okay. Let's break down their Q4 numbers and see what insights we can glean.
Starting with revenue.
Yes.
They brought in $1.25 billion,
Okay.
a year-over-year increase of 7.9%.
Impressive.
And remember, that includes those recent acquisitions.
So what about organic growth? The true measure of their internal strength.
Well, their organic revenue, excluding the boost from acquisitions, grew by 1% compared to Q4 2023.
So a modest but positive sign on the organic front.
Yes.
Solid growth overall. But let's get granular. How did their different business segments perform? Where are the pockets of strength and weakness within their diverse portfolio?
Well, financial services had a stellar quarter
Okay.
with 15.9% year-over-year growth driven by a combination of organic growth,
Okay.
4.3%, and a significant contribution,
Okay.
11.6% from the First Derivative acquisition. Clearly, they're capitalizing on that digital transformation wave sweeping through the financial sector.
Right. Banks and financial institutions are constantly under pressure to innovate, keep pace with technological advancements.
Yeah.
So it makes sense that EPAM is seeing such strong traction there. What about other sectors? Where else are they making their mark?
Life sciences and healthcare also performed well, growing 8.6% year-over-year with a healthy blend of organic and inorganic growth.
Okay.
This sector is ripe for disruption, and their expertise in AI and data analytics likely resonates strongly with healthcare clients.
It's fascinating to see how these, macro trends,
Right.
digitization in finance, AI, and healthcare,
Uh-huh.
are translating into concrete business opportunities for companies like EPAM.
Absolutely. It highlights why they're so focused on building specialized skills and capabilities that align with those emerging demands.
Okay, we've got financial services and healthcare firing on all cylinders. But what about the laggards? Are there any segments dragging down the overall performance?
Well, the travel and consumer vertical actually declined year-over-year,
Uh-oh.
though there was some offsetting growth from acquisitions.
That's not entirely surprising given the economic uncertainty and, shifting consumer spending patterns.
Right.
People are tightening their belts.
Yeah.
Being more cautious with travel and discretionary purchases?
It's a good point. A reminder that even the most innovative companies are not immune to broader economic headwinds.
Absolutely. But it's how they navigate these headwinds that will ultimately determine their long-term success.
Yeah.
And speaking of navigating, let's shift our focus to EPAM's geographic performance.
Okay.
Remember those global talent hubs we discussed earlier?
Yes.
Let's see how they're playing out in the numbers. Where are they seeing the strongest regional growth?
Well, the Americas, their largest region,
Okay.
grew by 11.4% year-over-year, although a significant portion of that was driven by the Nearis acquisition, which expanded their footprint in Latin America.
So the North American market is still a major growth driver,
Yes.
but they're also strategically expanding into new territories.
Right.
What about other regions? How's Europe faring?
EMEA grew by 3.1%, but that included a negative organic growth impact.
Okay.
They are seeing sequential improvement in that region, though,
Okay.
which is a positive sign.
Europe's been grappling with its own set of challenges.
Yeah.
So it's encouraging that they're seeing some stabilization there.
Right.
What about the Asia-Pacific region?
APAC had modest growth of 4.3% year-over-year,
Okay.
but it's still a relatively small part of their overall revenue.
So they're clearly focused on diversifying their global reach. But it's interesting to see how those different regions are performing at different paces. Okay. We've covered revenue and regional growth. Let's move on to the profitability side of the equation. What's the story there? Are those margin pressures we discussed earlier starting to show up in the numbers?
Well, here's where things get a little more complex.
Okay.
Their gross margin for the quarter was 32.2%,
Okay.
down from 33% in the same quarter last year.
Okay. So a slight dip in gross margin. What's driving that? Is it primarily those compensation increases we talked about?
That's definitely a contributing factor.
Okay.
They're also seeing some impact from the lower profitability of those recent acquisitions.
Right.
Integrating new companies often comes with initial margin pressure.
That makes sense. The question is, how quickly can they optimize those acquisitions?
Right.
Bring those margins back up?
That's a key question for investors to watch.
Yeah.
But it's important to remember that they're making these strategic investments in talent and AI
Right.
that are designed to drive long-term growth.
I see.
Sometimes you have to take a few steps back to leap forward.
It's all about finding that delicate balance between short-term profitability and long-term growth potential. And speaking of long-term potential, let's talk about their guidance for 2025. What are they projecting, and what assumptions are they basing those projections on?
Well, they're forecasting revenue growth in the range of 10% to 14%,
Okay.
with a significant portion of that, about 10%, coming from the inorganic contribution of those acquisitions.
So they're expecting continued strong growth,
Yes.
fueled in part by those new additions to the EPAM family.
Right.
But what about their profitability outlook? Are they anticipating those margin pressures to persist throughout the year?
They're projecting non-GAAP income from operations in the range of 14.5% to 15.5%.
Okay, so they're expecting some margin pressure to linger,
Yeah.
at least for the near term. What are the key factors influencing that projection?
Well, they're being very transparent about the headwinds they're facing.
Good.
They acknowledge that compensation increases,
Right?
the limited ability to raise prices in the current environment,
Sure.
and the dilutive impact of acquisitions will continue to weigh on their profitability.
So they're facing some significant challenges, but they're also being upfront about them,
Yes.
not trying to sugarcoat the situation.
Right.
That level of transparency is refreshing.
It is.
But are they just acknowledging these headwinds? Or are they actively taking steps to mitigate them?
Yes, they are.
What's their game plan for improving their profitability outlook?
They're focused on improving utilization,
Okay.
optimizing their pyramid structure,
Gotcha.
and scaling their operations to become more efficient.
Yeah.
They're also hoping that the pricing environment will improve somewhat as the year progresses.
Fingers crossed.
It's a multi-pronged approach to tackling a complex issue.
It sounds like they're not shying away from the challenges,
Oh, no.
but rather confronting them head on.
Exactly.
And that kind of proactive mindset is often what separates,
Yeah.
the winners from the also-rans in the business world.
Agreed. And their focus on innovation and strategic investments suggests they're well positioned to navigate these uncertain times and emerge even stronger.
Okay, folks, that wraps up our in-depth analysis of EPAM's financial performance. We've covered a lot of ground. But before we move on to the This Is Not Financial Advice segment, where we'll let our imaginations run wild with potential trading scenarios,
I like it.
let's take a quick recap of the key takeaways.
Absolutely.
What are the big picture insights listeners should remember?
So, to sum it up, EPAM exceeded expectations in Q4, driven by a strong performance in core engineering services and growing demand for their AI expertise, particularly in the realm of generative AI. They're seeing positive results from recent acquisitions,
Okay.
but are also grappling with margin pressure stemming from those compensation increases and a challenging pricing environment.
Right.
Their guidance for 2025 reflects continued growth, but also a recognition of the need to balance profitability with strategic investments for the future.
Excellent summary.
Thanks.
And now for the fun part.
Let's have some fun.
This is not financial advice, but
But let's have some fun and cook up an outrageous yet plausible trade idea based on EPAM's store and what we've learned today.
I'm all ears. Let's hear it.
Imagine this. EPAM, riding the generative AI wave, becomes the undisputed champion of enterprise AI implementations.
Okay, I'm picturing them as the go-to AI partner for businesses.
Yes.
Almost like the trusted advisor,
Right.
helping companies navigate this complex and rapidly evolving landscape.
Exactly. And as they rack up these high-profile wins,
And successfully execute these complex AI projects for big-name clients, their reputation skyrockets.
they're on the cover of Forbes, presenting at industry conferences,
Right.
being interviewed on CNBC. they become synonymous with AI success in the business world.
Right. And as their reputation grows and their track record of successful AI implementations solidifies, their stock price starts to reflect this dominance.
So what's the trade here? Do we just buy EPAM stock and wait for the AI magic to happen?
Not so fast.
Okay.
Remember, there's always an element of risk.
Of course.
What if the AI hype bubble bursts?
Right.
What if competition heats up and erodes their margins?
It could happen.
What if they stumble in their execution?
Yeah.
And those high-profile projects fall short of expectations?
Okay, so a straight stock purchase might be too risky for some investors.
Yeah.
We need something with a little more leverage,
Yes.
a way to amplify potential gains while also acknowledging the inherent risks involved.
How about this?
We buy call options on EPAM stock with a strike price significantly above its current market value
Okay.
and an expiration date a year or two out.
Now you're talking. Call options, those give us the right, but not the obligation, to buy EPAM stock at a predetermined price within a specific time frame.
Exactly.
We're essentially betting that EPAM stock will soar past that strike price
Yes,
as their AI strategy gains traction.
precisely. And if this AI-fueled growth scenario plays out, those call options could become incredibly valuable,
Wow.
yielding substantial returns.
But it's important to remember, folks, options trading is not for the faint of heart. It's high risk, high reward. You could lose your entire investment
Right.
if EPAM stock doesn't perform as expected.
Exactly. This is just a thought experiment,
Of course.
a fun way to explore potential scenarios.
Right.
Before making any investment decisions, do your own research, understand the risks involved, and consult with a financial advisor.
Couldn't have said it better myself. But hey, it's fun to dream, right?
It is.
And who knows, maybe this crazy AI-powered growth scenario will come true.
It's definitely a story worth watching closely. And that, my friend, concludes our wild speculation for the day.
Back to reality.
Back to reality.
And a closer look at some of the more nuanced details of EPAM's financial performance.
Excellent idea. We've talked about their revenue growth projections, even their big bet on AI. But what about the underlying financials that provide a more granular view of their health and stability?
Absolutely. Let's start with their cash position.
Okay.
They ended the quarter with $1.3 billion in cash.
That's a hefty war chest. Gives them a lot of flexibility for those strategic investments we were discussing earlier,
Right.
whether it's acquisitions, talent acquisition, or research and development.
Indeed, it's a sign of financial strength and provides them with a cushion to navigate any potential economic turbulence. Another interesting metric to consider is their DSO, or Days Sales Outstanding, which came in at 70 days. Now, for those unfamiliar with this metric, DSO essentially measures how long it takes a company to collect payment after a sale.
Right.
It's a key indicator of their efficiency in managing cash flow.
Exactly. And a lower DSO generally indicates a healthy cash conversion cycle, meaning they're collecting their receivables quickly and efficiently.
So a 70-day DSO suggests they're doing a good job of managing their working capital
Yes.
and keeping the cash flowing. Now let's shift gears and talk about their workforce,
Yeah.
the heart of their business.
Absolutely.
They ended Q4 with over 55,100 consultants, designers, and engineers.
A lot of people.
That represents a 16.3% increase compared to the same period last year. Wow, that's significant growth.
It is.
Remember, that includes the nearly 6,000 employees they brought in through those recent acquisitions. What about organic headcount growth, which tells us how well they're attracting and retaining talent on their own?
Well, they added around 1,500 employees organically in Q4.
Okay.
Then they're projecting continued hiring in Q1 of 2025.
So they're clearly in growth mode, both organically and through acquisitions.
Yes.
But as we discussed earlier, that growth comes with the challenge of managing compensation costs,
Right.
especially in a tight labor market
Yeah.
where skilled tech professionals are in high demand.
It's a balancing act, weighing growth ambitions with the need to maintain profitability.
Right, right. And their utilization rate in Q4 was 76.2%. Utilization rate is a crucial metric in the professional services industry.
Yes.
It essentially tells us how effectively they're deploying their workforce on billable client projects.
Precisely. And a higher utilization rate generally translates to higher profitability as you're maximizing the revenue generated from your workforce. So that 76.2% figure is a positive sign,
Okay.
indicating they're keeping their people busy and productive.
It suggests they're striking a good balance
Yes.
between having enough talent to meet demand,
Right.
ensuring their workforce is being deployed efficiently.
Yes.
All right, we've dissected their Q4 numbers.
Yeah.
Explore their 2025 guidance.
Mm-hmm.
And even indulged in some wild what-if scenarios.
I like it.
What are your final thoughts on EPM's story?
What?
And what should listeners be paying attention to as we move forward?
What stands out to me is their commitment to innovation,
Okay.
particularly in the rapidly evolving field of generative AI.
Yes.
They're making bold bets, and it will be fascinating to see how those bets play out over the next few years.
Totally.
Will they be able to maintain their early mover advantage?
Good question.
Or will competitors catch up?
Yeah, it's a fascinating story. We'll definitely be keeping tabs on it.
Agreed. They're not content with being just another tech services company. They're aiming to be a leader in AI-driven business transformation.
Bold.
But as we've discussed, there are challenges ahead.
There are.
Their success will depend on several key factors.
Right.
Their ability to attract and retain top talent in a competitive market.
Right.
Their ability to effectively integrate those recent acquisitions and realize the synergies they've promised.
Right.
And their ability to navigate a potentially challenging economic environment. It's a tall order.
It is.
But they seem to have the ingredients for success.
Okay.
A strong track record, a forward-thinking leadership team, and a commitment to innovation.
It's a story with a lot of moving parts, and
Yeah.
we'll be watching it closely here at Talk Tickers.
And that, my friend, concludes our wild speculation for the day. Back to reality and a closer look at some of the more nuanced details of EPAM's financial performance.
Excellent idea.
Yeah.
We've talked about their revenue growth projections,
Right.
even their big bet on AI. But what about the underlying financials that provide a more granular view of their health and stability?
Let's start with their cash position. They ended the quarter with $1.3 billion in cash.
That's a hefty war chest. Gives them a lot of flexibility for those strategic investments we were discussing earlier,
LED.
whether it's acquisitions, talent acquisition, or research and development.
It's a sign of financial strength and provides them with a cushion to navigate any potential economic turbulence. Another interesting metric to consider is their DSO, or days sales outstanding,
Okay.
which came in at 70 days.
Now, for those unfamiliar with this metric, DSO essentially measures how long it takes a company to collect payment after a sale. It's a key indicator of their efficiency in managing cash flow.
Exactly. And a lower DSO generally indicates a healthy cash conversion cycle, meaning they're collecting their receivables quickly and efficiently.
So a 70-day DSO suggests they're doing a good job of managing their working capital
Yes.
and keeping the cash flowing. Now let's shift gears and talk about their workforce, the heart of their business.
Absolutely.
They ended Q4 with over 55,100 consultants, designers, and engineers.
A lot of people.
That represents a 16.3% increase compared to the same period last year. Wow, that's significant growth.
It is.
And remember, that includes the nearly 6,000 employees they brought in through those recent acquisitions. What about organic headcount growth, which tells us how well they're attracting and retaining talent on their own?
Well, they added around 1,500 employees organically in Q4, and they're projecting continued hiring in Q1 of 2025.
So they're clearly in growth mode, both organically and through acquisitions. But as we discussed earlier, that growth comes with the challenge of managing compensation costs, especially in a tight labor market where skilled tech professionals are in high demand.
Right. It's a balancing act, weighing growth ambitions with the need to maintain profitability. And their utilization rate in Q4 was 76.2%.
Utilization rate is a crucial metric in the professional services industry. It essentially tells us how effectively they're deploying their workforce on billable client projects.
Precisely. And a higher utilization rate generally translates to higher profitability as you're maximizing the revenue generated from your workforce. So that 76.2% figure is a positive sign,
Yep.
indicating they're keeping their people busy and productive.
It suggests they're striking a good balance between having enough talent to meet demand,
Yes.
ensuring their workforce is being deployed efficiently.
Yeah.
All right, we've dissected their Q4 numbers, explored their 2025 guidance, and even indulged in some wild what-if scenarios.
I like it.
What are your final thoughts on EPAM's story?
Well,
And what should listeners be paying attention to as we move forward?
what stands out to me is their commitment to innovation,
Okay.
particularly in the rapidly evolving field of generative AI.
Yes.
They're making bold bets, and it will be fascinating to see how those bets play out over the next few years.
Totally.
Will they be able to maintain their early mover advantage?
Good question.
Or will competitors catch up?
Yeah, it's a fascinating story. We'll definitely be keeping tabs on it.
Agreed. they're not content with being just another tech services company. They're aiming to be a leader in AI-driven business transformation.
Bold.
But as we've discussed, there are challenges ahead.
There are.
Their success will depend on several key factors.
Right.
Their ability to attract and retain top talent in a competitive market.
Right.
Their ability to effectively integrate those recent acquisitions and realize the synergies they've promised.
Right.
And their ability to navigate a potentially challenging economic environment. It's a tall order.
It is.
But they seem to have the ingredients for success.
Okay.
A strong track record, a forward-thinking leadership team, and a commitment to innovation.
It's a story with a lot of moving parts, and we'll be watching it closely here at Talk Tickers. And that, my friends, brings us to the end of our deep dive into EPAM Systems Q4 2024 earnings call.
We've covered a lot of ground today, from their impressive financial performance,
Yeah.
strategic acquisitions,
For sure.
to their ambitious bet on generative AI and the challenges they face in managing profitability amidst rising costs,
Right.
and a competitive landscape.
There's a lot to unpack.
We hope you found this journey informative, insightful, and maybe even a little bit entertaining.
If you're hungry for more in-depth analysis of earnings calls and thought-provoking discussions about the companies shaping the future of technology and business, be sure to subscribe to Talk Tickers wherever you get your podcasts.
Absolutely.
Until next time, happy investing.